Classical Accountancy Numerical Problem Solutions, presented by NCERT.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Distribution of Profits Solutions, Problem 16 Solution. The problem statement is as follows. On March 31st, 2000 XA, after the close of accounts, the capitals of Mountain, Hill and Rock stood in the books of the firm at 4 lakh rupees, 3 lakh rupees and 2 lakh rupees respectively. Subsequently, it was discovered that the interest on capital at the rate of 10% per annum had been omitted. The profit for the year amounted to 1,50,000 rupees and the partners' drawings had been Mountain 20,000 rupees, Hill 15,000 rupees and Rock 10,000 rupees. Calculate the interest on capital. So, in this problem, we are asked to calculate the interest on capital. It is also given that the books of the firm are closed on March 31st, 2000 XA, and on that day, the capitals of the three partners are 4 lakh rupees, 3 lakh rupees and 2 lakh rupees respectively. It is also given that the interest on capital is at the rate of 10% per annum. Now, to calculate the interest on capital, we use the formula interest on capital is equal to the opening capital multiplied with the rate of interest upon 100. So, if we know the opening capital, we can calculate the interest on capital. But what is given to us in the problem is the closing capital. It's not opening capital. But no worries. We can still find the opening capital and from that we can calculate the interest on capital. Now, if we know the opening capital, see, here we don't know the opening capital. But in case if we know the opening capital and to that we add the interest on capital and lessen the drawings and add the profit share, it would give us the closing capital. But in the problem, it's given to us that the interest on capital was not considered and was omitted. So here, let's not consider the addition of the interest on capital. Let us lessen the drawings and add the profit share. Now, our aim is not to calculate the closing capital. To find the interest on capital, we should know the opening capital. So let's keep the opening capital on the left hand side and let's send these drawings to the right. Let's also send this profit share to the right. So we get this as opening capital is equal to closing capital, add drawings and lessen profit share. See, we are lessening the drawings on the left hand side. So if we send the drawings to the right, we should add the drawings. Similarly, we are adding the profit share on the left side. So if we send the profit share to the right, we should lessen it. So to calculate the opening capital, we need to know the closing capital, the drawings and the profit share of each partner. Now, it is given in the problem that the closing capitals of the partners are 4 lakh rupees, 3 lakh rupees and 2 lakh rupees respectively. It is also given that their drawings are 20,000 rupees, 15,000 rupees and 10,000 rupees. These two things are directly given to us. But the profit share is not directly given to us. But instead, it is given that the profit for the year is amounted to 1,50,000 rupees. From this, we have to find the profit share. Now, to calculate the profit share of each partner, we need to find the net profit that should be distributed among the partners. See, the net profit is not directly distributed to the partners, right? From the net profit, we have to allocate the appropriations and then the remaining profit should be distributed among the partners. So, the distributable profit can be calculated by considering the net profit and then from that, we lessen the interest on capital. Now, it is given in the problem that the interest on capital was not considered or omitted. So, the net profit is distributed among the partners without considering the interest on capital. In other words, all the net profit is distributed among the partners. See, the question is in what ratio? See, the profit sharing ratio in which the net profit is distributed among the partners is not given. So, how to proceed now? Well, we know that according to Indian Partnership Act 1932, if the partnership deed is silent about the profit sharing ratio, then the profits should be shared equally among the partners. In other words, In our case, the profit should be shared among all the three partners in the ratio of 1:1:1 or equally. Considering this, the profit share of each partner will be equal to the total net profit amount of 1,50,000 rupees multiplied with the profit sharing ratio of each partner, which is 1/3. Now cancelling with 3, 3 ones are 3 50,000s are. The resulting value of this calculation is 50,000 rupees. So now we have everything to find the opening capital as well as the interest on capital. Let's first write the heading Calculation of Interest on Capital. In a table, let us have a column for amount in rupees for partner Mountain, one column for amount in rupees for partner Hill, and one last column for amount in rupees for partner Rock. Let us first write closing capital of each partner. Just to remind you, the closing capital of each partner is given as 4 lakh rupees, 3 lakh rupees and 2 lakh rupees. Let's write this in our table. 4 lakh rupees, 3 lakh rupees, 2 lakh rupees. To this, let us add the drawings made by each partner. Just to remind you, the drawings made by each partner are given as 20,000 rupees, 15,000 rupees and 10,000 rupees. Let's write this in our table. 20,000 rupees, 15,000 rupees, 10,000 rupees. Now, as per the formula, we have to lessen the profit share. And as we have just now calculated, the profit share of each partner is 50,000 rupees. So, let's write less profit share. Let's write 50,000 rupees of profit share for each partner. Now, we have everything to calculate the opening capital. For partner Mountain, from the sum of 4 lakh rupees and 20,000 rupees, if we subtract 50,000 rupees, we get 3,70,000 rupees. For partner Hill, from the sum of 3 lakh rupees and 15,000 rupees, if we subtract 50,000 rupees, we get 2,65,000 rupees. For partner Rock, from the sum of 2 lakh rupees and 10,000 rupees, if we subtract 50,000 rupees, we get 1,60,000 rupees. Now, as we know the opening capital, we can now calculate the interest on capital. Just to remind you, the formula for calculating the interest on capital is given as interest on capital is equal to opening capital multiplied with the interest rate on capital upon 100. Also, the interest on capital is at the rate of 10% per annum. So, with this information, let's calculate the interest on capital. Now, the interest on capital for the partner Mountain is his opening capital amount of 3,70,000 rupees multiplied with the rate of interest on capital, which is 10/100. Let's cancel a 0 in 100 for the 0 in 10. Let's cancel another 0 in 100 for the 0 in 3,70,000 rupees. The resulting value of this calculation is 37,000 rupees. This is the interest on partner Mountain's capital. Now, the interest on capital for the partner Hill is his opening capital amount of 2,65,000 rupees multiplied with the rate of interest on capital, which is 10/100. Let's cancel a 0 in 100 for the 0 in 10. Let's cancel another 0 in 100 for the 0 in 2,65,000 rupees. The resulting value of this calculation is 26,500 rupees. This is the interest on the partner Hill's capital. Now, the interest on capital for the partner Rock is his opening capital amount of 1,60,000 rupees multiplied with the rate of interest on capital, which is 10/100. Let's cancel a 0 in 100 for the 0 in 10. Let's cancel another 0 in 100 for the 0 in 1,60,000 rupees. The resulting value of this calculation is 16,000 rupees. This is the interest on the partner Rock's capital. And with that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.